Hey guys, this is Sean Moran, and today we're going to talk about Chapter 4 of my book, Buying a Car. Link below to the book, Saving Your Future, and this video series will discuss each chapter of the book, and this particular week it's Buying a Car. So I start the chapter out with a quote that says, the cheapest car you'll ever own is the one you already have. So keep in mind, if you have a car, you're on a budget, it's usually cheaper to do work on the car, put some money into your current car, than it is to purchase another one. So if it's a really reliable vehicle and it just needs some maintenance, a lot of times, more times than not, it's going to be cheaper to put money into your current car. Now, if you have lots of money and you're not really concerned about any of the other savings things, and you have everything covered, buy whatever car you want. Buy a Ferrari if you want. But for most of us, car buying is a significant expense, and making a good choice can be a sound financial investment. Making a bad choice can be very costly to the point where it could really derail your spending. There's a lot of people out there that are leasing cars that are, the people are making $25,000, $30,000 a year, and they're driving a brand new Mercedes or BMW. Not a smart choice, not a practical choice. So don't have a car loan of $400, $500, $600 a month when your income doesn't go along with that. Doesn't jive with the ability to pay that kind of money for a car. Yeah, you can pay that, but there's so many better things that you can put your money into. So in this chapter, we discuss buying versus leasing. We discuss, putting money down. We discuss whether a new car or a used car is better for your situation. We talk about loans being 3, 4, 5-year loans. My opinion, don't get a car loan more than 3 years. But I can't afford the payment if it's 4 years or less. Then honestly, you can't afford the car. After 4 years is about the time where you can end up upside down on the loan. So what does that mean? If you buy a car, let's say it's $20,000, and after 3 years you owe, on a 5-year loan, you owe $12,000, but the car is only worth $10,000. If you get in an accident, or that car's totaled or stolen or whatever it might be, the insurance is only going to pay you the amount that the vehicle is worth, not what you owe. So you could end up in a situation where your car is totaled, you no longer have the car, and you got to take money out of your pocket and pay it to the bank to pay off the vehicle. Another thing that people do oftentimes when they're in a loan like this is they say, well, let me just roll the amount I owe into a new car and get another car and another car. We talk about in the book ways that you can save money, once your car is paid off, use that money that you would be spending on a car to help fund other investments, whether it be retirement, whether it be a rainy day fund, whether it be saving for a house or other types of ways that would be a good place to spend your money rather than spend it on another car that you probably don't need. Again, if a car is your thing and you're really into cars, use some common sense, but again, you need to enjoy life as well. You can't just put every dime away. But consider the things that I have written here. Ask me any questions. Feel free to post a comment on the bottom of this video asking me any questions about your particular scenario with a car. I'm happy to answer that. Take a look at some of the other videos I've done. I'm doing a video on each chapter in my book. My book is available on Amazon, so definitely consider checking it out. And if you've enjoyed this video, if you learned something, give it a thumbs up. Subscribe to see some of the other videos that I'm putting out as well, because I will cover every chapter in this book. And I'd also be interested in hearing other scenarios of your financial life that you'd like me to talk about. Thanks again for watching the video, and I look forward to seeing you in the next one.